Good evening, all. It's Sunday night. This is Shay Horowitz, ShogunTrading.com. This is our free weekly newsletter. Just give you a little update on the market. This has been a very difficult month from a trading standpoint, and the reason why is because the market has been going straight up. Usually that's pretty easy, except that going straight up sometimes is very dangerous, especially when you have very, very sharp pullbacks. So most traders were having difficulties with these sharp pullbacks, and this is a 60-minute chart of the S&P 500. I'll dive right into it. All these small pullbacks, really, really sharp pullbacks, usually trigger stops. Here's another one over here, and then we gap up. It is what it is, and the buy and hold at this point. If you bought at the bottom and held, that was the best strategy. Or the second strategy that worked really well for us was buying the pullbacks. Actually, not entering with the trend, but entering on the pullback when the market actually pulled back. Right now, the market went into profit taking, gap down, came back down, and so on, and then later gapped back up and came up. Now, whenever you have this kind of an island, it's a very bullish sign. Whenever you have a gap down and then a gap back up, and then especially when it continues up to the upside, that's a very bullish sign. Technical analysis is not working quite as well right now because the market is changing on a daily basis. Why is it changing on a daily basis? Because we have changes of rules on a daily basis. For example, we no longer have mark to market. We have mark to imagination. We don't know how to value assets. We didn't know how to value assets before, but we are not going to know. We're going to know even less now because there's not really set rules on how to value assets. We have the administration firing a major CEO, a CEO of a major private company, not private but public company, which is General Motors. Now there is talks. Well, Geithner now is going to fire. He's going to have control over CEOs of financial companies as well. He's going to have control over salaries, bonuses of financial employees. Banks are in a hurry to give back the TARP money. That's a very interesting because there's a control issue over here. If bank has TARP money, then government has control over who works for them, how they get hired, how they lend the money, how they pay their employees. So the goal, of course, is to pay back as soon as possible, as fast as possible. So that's quite a bit of a struggle right there. We also have quite a bit of the international struggle right now, especially with the dollar. Our feds are in a hurry to devalue our dollar as fast as possible, and of course, people that we owe money to, such as the Chinese, have a problem with that because they don't want to pay us less. They don't want us to pay them less. They want us to pay them more, and therefore they might get away from the dollar as a standard currency. So all these things that come out on a daily basis, and really over the past 3 weeks, we've seen either Geithner, Bernanke, or Obama on the TV, on the news, almost on a daily basis, announcing a different program for economic recovery, or announcing different things that they're working on. So as long as that comes out, the market is extremely nervous. Now, what does that create? If you knew that every day the rules are going to change, what do? You either stay away and you don't do anything, or you take you buy off the bottom. You buy kind of like in a garage sale. This is only 25 cents. Sure, I'll buy it. I'll gamble with it. That's the kind of buyers we've been having. We don't have buyers that are saying, you know what, I see value in this company, I see growth in this company, I think this company is going to be great because the economy is going to be great, I'm just going to invest my money into it. We don't have those kind of buyers. Why? Because nobody thinks that the economy is going to be great, and nobody thinks that the company is going to do extremely well. We have people that are just saying, this is cheap, I'm going to buy it, I'm going to gamble on it, and that's it. Now, the short sellers basically stopped trading, and the reason why the short sellers stopped trading is because every time that they trade, every time that the market gets any kind of traction on the short side, they get slammed back up. There's traction on the short side, and the market slams them back up. Traction on the short side, and the market slams back up. And that makes the short seller say, you know what, I'm going to leave that alone. I'm going to wait for the market to show some weakness, and then so I'm going to step in. People that are long, people that actually own stocks, are not selling either because the market is going up. Why would you sell if you're at tremendous loss because most people own their stocks much, much lower? Why would people sell? So what you have right now is you have no short sellers, no sellers, You have no long-term value buyers. You have short-term, in a way, gamblers, people that are buying just for the pop off the bottom. Yes, there's some day traders and some swing traders that are just taking advantage of the swings as well, but those are a very small percentage of the market. Most of the market right now are bottom pickers. They're looking for the fire sale value on assets, and that's the reason why the market has been trading in a very narrow range. Up, came back, very choppy, came back down, very choppy, back up. That's why we're trading. Let me show you the same thing on a daily basis, and you can see how the market is basically back to this resistance level. It's not just back to this resistance level, actually breaking it. And 850 is going to be our next resistance level right here, and then we're going up. I am not going to bet against the market. It's very difficult. It's a losing proposition to fight the Fed. If the Fed is trying to fix the market, is trying to make the market go up, then it's very difficult to fight them. And therefore we are trading with the Fed. We are using the pullbacks to enter. That's working pretty well for us. Some breakouts on a very short term basis in the direction of the trend are also working out for us pretty well right now as well. Let me see. The market is going to gap down this morning, Monday morning, based on the data about the banks and about how the Geithner is going to be able to control bank CEOs and so on. Nothing really serious. Gold is pulling back a little bit, not a whole lot. Not much economic news on Monday. We are entering earnings season, so you're going to have to pay attention to stocks on earnings season. There's going to be quite a bit of surprises both on the upside and on the downside, and that's, I think, what a lot of people are going to be worried about. I am waiting for the next major trend. While I'm waiting for the next major trend, we are trading this one. We're trading this one on the long side mainly. Anyway, I have a great week, and I will talk to you next Sunday. Take care.